Hello and a warm welcome. You joined us on Market Cafe right here on ET Now. I'm Ashesha Advaryu. With me is Kanishka Sarkar joining us from our Delhi studio. And this is a show where we discuss all the stocks that you need to keep an eye out on in today's trading session. What are the global updates that we are getting from across the world? And we'll keep you up to speed and prep you for today's trading session. But Kanishka, let's get started with how US markets performed yesterday.
That's right, Ashesha. Very good morning to you. First of all, like we say, another day, another tariff. Now, responding to all that news flow that we have seen overnight, the Wall Street did close on a mixed note. The S&P 500, that slipped about 0.4%, whereas the Dow, that tumbled over 400 points as inflation concerns weighed on sentiment. Now, in contrast, the tech-heavy Nasdaq Composite, that gained about 0.2%, hitting a record close that was boosted by Nvidia, which jumped about 4% on hopes of resuming AI chip sales to China. Now, as we pointed out yesterday, inflation data was something that was key to watch. Now, June CPI data for US came in at 0.3% on a month-on-month basis and 2.7% on a year-on-year basis. That nearly matches estimates, but reviving concerns over the impact of Trump's new tariffs. Investors are now awaiting the Producer Price Index, that is PPI report, that is due later today, with a 0.2% rise expected. On the earnings front, JP Morgan and Citigroup, they did beat revenue estimates with strong trading performance. Big names like Goldman Sachs, Morgan Stanley and Bank of America, they are next in line to report their earnings later today. Meanwhile, Donald Trump's fresh comments are also in the spotlight. He's called for rate cuts, defending tariffs, and has also made remarks on Russia, India and Brazil, which is adding to the global market unease. He's also announced a 19% tariff on Indonesia and says that US won't be paying anything. But that is something the street is expected to react to today, alongside his renewed criticism of Fed Chair Jerome Powell. So that's how the US market setup largely looks like today. But how are things on the crude front, Ashesha?
Yes, Brent crude has snapped its two-day losing streak. In fact, it is trading with some amount of gains in today's trading session, up 0.4% as we speak, to trade near that $69 per barrel mark, while WTI crude is below that $67 per barrel mark. But several factors continue to weigh heavy on the oil market. One, of course, is the latest inventory data that is expected to come in, and crude's near-term market structure continues to point towards tightness, and that is the reason oil is trading with some amount of gains in today's trading session, up 0.4%, trading near that $69 per barrel mark. But remember, we have some important commentary that has come in from OPEC Plus yesterday evening, where they believe that world demand outlook continues to remain very strong. They are saying that the world economy is likely to do better in the second half of calendar year 2025. Demand growth forecasts have remained unchanged for this year, for 2025 and for 2026. And they also say that India, China and Brazil are outperforming as compared to several other countries, and demand outlook from these countries continues to remain very strong. So those are some of the factors that continue to impact the oil market. But as far as the yellow metal market is concerned, spot gold too has snapped its two-day losing streak. It is gaining 0.2% today to trade near that $3,330 per ounce mark. Safe haven buying continues because of the uncertainty that we are seeing around tariffs. US President Donald Trump yesterday said that he will be imposing 19% tariffs on Indonesia. So every other day we have some other news flow with respect to tariffs. Uncertainty continues, and that is the reason safe haven buying has also continued in the global market. Currently trading with marginal amount of gains, gold is trading near that $3,330 per ounce mark.
That's right. So that's how the commodity market setup largely looks right now. But let's also shift focus to how the Indian markets performed yesterday. In fact, let's get Snehi to take us through all that happened on the D Street in the previous session.
Well, yes, a very good trading session is what we saw yesterday. Nifty ended in the green. You had Nifty that was trying to cross the 25,200 mark. We've ended barely shy of that, but nothing to complain about because very good move coming in on the Nifty. Sensex too. Nifty Bank was the outperformer in yesterday's trading session, with both private and PSU banks participating in that rally. So very good moves coming in across the entire market yesterday. Even the broader end outperformed the Nifty, and a 1% uptick is what we saw on both the mid-cap and small-cap indices. If you talk about some nifty gainers, Hero Motocorp, a 5% uptick is what we saw on this stock. Bajaj Auto, Sun Pharma, Shriram Finance, Apollo Hospitals, all of these stocks trading anywhere between 2 and 5%. So that's the range of the gain that we've seen from some of these nifty counters. On the flip side, pressure continued for HCL Tech. A 3.2% cut is what we saw yesterday on the back of poor numbers, followed by SBI Life, Eternal, HDFC Life and Tata Steel. If you talk about sectoral gainers and losers, no losers on the sectoral front because all sectors ended in the green yesterday, led by Nifty Auto. Names like Hero Motor, like I just mentioned, TVS Motor, Bajaj Auto, all of these stocks did well. That was followed by Pharma, PSU Banks, Realty, FMCG, Nifty Bank, IT, Media, Energy and Metal. Nifty Metal was the least gaining sector, and you had some losing moves coming in from some of the steel stocks like Tata Steel, Jindal Steel, JSW Steel. Along with that, NMDC and Hindustan Copper were also in the red. So mixed moves coming in from Nifty Metal, but that has also ended with tepid gains in the green. Now, when we chatted with our experts on the closing show yesterday, our in-house technical expert Sharan had to say that we can expect Nifty to open at 25,200 mark this morning and expect a breakout after that if we are able to sustain that mark, and a 30-40 point uptick is what we can see post open if we open around 25,200. So those are the key levels to watch out for in today's trade.
So those are some of the crucial levels that you need to keep an eye out on in today's trading session. Remember, Nifty ended nearly 113 points higher to end near that 25,200 mark. But as I mentioned, several developments coming in around the oil market, which currently trades with some amount of gains. But how should you position yourself? And what is the latest news when it comes to the oil market? To discuss exactly this, we are now joined by Peter Maguire, CEO at AustraliaTrading.com. Peter, thanks so much for taking your time out and joining us here on ET Now. We have barely seen any impact of the OPEC Plus supply hike announcement that came in a couple of weeks ago. Oil market has not done much. It is currently trading near $69 per barrel mark. How do you see the demand supply equation shaping up for the oil market, and what is the outlook going forward?
Well, good morning. Thanks for allowing me on the show. Greetings from Sydney. Couple of things. First off, yes, we understand. I think oil prices are very much flatlined. They've been very range bound over the last couple of weeks and certainly month or so. So that tightness, there's no real breakout either side. We're not down at under 65 and we're not above 70. So it really in that narrow band. Second part, as far as growth, and growth is what the market is identifying in the second half. Relatively strong growth from the likes of Brazil. Certainly when you're looking at economic growth coming from the likes of China as well, and India. So there's the first part of it. So that's going to be relatively good from a demand picture. And the other side, Eurozone and the USA really starting to pick up and be re-engaged. Post that COVID situation, but very much I think the growth engine of the second half is going to be stronger than the first.
Okay. Hi, Peter. This is Kanishka also joining in. Just stretching a little bit into the demand point. Now, despite that optimism that we have seen, OPEC Plus that has kept the 2025 and 2026 oil demand forecast unchanged. So, do you see this as a sign of caution?
It's to some extent caution, but the other side, I think, is the overall re-engagement. A lot of these economies are relatively okay. I mean, from a growth perspective and moving forward. So I think that you're going to see continued demand. There's no going to be any, in the sense of any drawdowns, and you're going to see disruptions unless you saw something dramatic happen from a geopolitical standpoint. Let's push that out of there. But if you continue this sort of roll forward, then I'm pretty sure that you're going to see a re-engagement as far as consumption and, of course, for the likes of all forms of oil and all forms of energy, from road building and bitumen all the way through to naturally, motor vehicles and trucks and cars and boats and so on.
Okay, so that's as far as demand outlook is concerned. But Peter, there were also some reports which suggested that perhaps OPEC Plus could pause the output hike after September. It is already planned till August and September, which means that total 2.2 million barrels of unwinding will be completed 1 year ahead of their schedule. Do you expect OPEC Plus to then pause their output hike after September, given how demand is shaping up?
Well, I think we've got to work through that. We've got to see how the market anticipates and experiences over the next 2 months. You've got the introduction of tariffs. We've got the understanding as far as price, what's happening on the inflation story that's globally, and the positioning as far as OPEC plus and compliance. So I think we've got to get through the next 55 days or so, 50 days, to take a better picture as far as OPEC and what they're expecting in Q4. If they were to stay at that 548,000 as far as production, up from 411,000, then I think it's very much in their hands. So you can't rule out that they won't do it, but I can't rule out that they will do it. So we've just got to take it, very much week by week to get to that point.
Okay. So Peter, now, just as you were mentioning, when we started the conversation, that emerging markets are showing some sort of strength. So with India, China and Brazil, with them outperforming, how much of the oil demand outlook that OPEC Plus has given, do you think hinges on these three economies?
Well, very much so. I mean, you've only got to look at, the likes, they're powerhouse economies, India, China. You look at Brazil, they're big economies as far as population base and certainly consumption. And they're growing consumption. They're really changing the footprint from infrastructure all the way through to usage, and they're a dynamic economy. So and young. I mean, if you look at India and Brazil, young populations, not so much in China. So I'm looking at more rapid take up as far as energy consumption over certainly for the rest of this year and then leading in for the rest of the decade. So it's a very exciting market to be a part of, and you can't rule out growing consumption over the years ahead.
Okay, so those are some of the factors which continue to impact the oil market. But Peter, if you can tell us, what is the ballpark range where you're expecting oil to settle for the rest of this calendar year? Is it expected to be between that $65 to $70 per barrel for the rest of 2025?
I think it'll be cheaper, and I think it'll be cheaper because of naturally the increase as far as production and what OPEC Plus have identified from the production side of it. And I'm expecting Q4 to be actually a glut in the market, so probably cheaper prices. We've just got to get to that point again and work through this Northern Hemisphere summer, but I would expect Q4 to be cheaper than what Q3 is.
All right, so Q4 is likely to shape the outlook more than Q3. Thank you so much, Peter, for that input. And thank you so much for joining us this morning and telling us all about the commodity markets. Appreciate your time. Thank you so much. All right, then let's move on and shift focus back to the Indian market and take a look on how the F&O snapshot is looking. Sharad is here to give us a snapshot of that. Sharad, take it away.
Well, the positioning in the F&O market is still range bound, and we are tracking global cues as well as the Indian earnings season. Overall, looking at the volatility, the India VIX that has actually come down from 11.98 to 11.48. signifying very less volatility in the market. The PCR changes, they're still comfortable beat for Nifty or Nifty Bank, currently at 0.76 and 0.84 respectively. Overall, the index futures, there's a slight long build-up happening with a change in open interest of almost 0.76%. Now let's look at the most active strike price in the Nifty weekly expiry. The call is coming in at call buying at 25,200 levels, and put writing was also coming at the same levels which we had mentioned earlier. The highest open interest strike price for the Nifty weekly expiry, the put stands at 25,000 and call stands for 26,000 levels. Apart from this Nifty Bank, the index futures sees a change in open interest to a higher side as compared to Nifty at almost 4.72%. And the overall trend is a long build-up. So both the headline indices, long build-up is happening with the highest open interest strike price for Nifty monthly expiry stands at, for both put and call, at 56,000 levels. Now there has been a slight change in the FI long positioning after the previous trade, slight bump up, but still very minor. It's at roughly 19% DI long positioning that has also almost remained the same. And the retail long positioning that has also climbed up a bit. So of course, all the categories, there has been a minor jump when it comes to the positioning of the longs. F&O band, 3 companies are in focus: RBL, Hind Copper, which were already there earlier, and now Glenmark Pharma also comes, and today itself is Glenmark Pharma's investor day as well.
So that's how the F&O setup is looking like for today's trading session. But Sharad, stay on with us, and let's now put the spotlight on all the stocks that will be in focus today, either based on news or any other earnings that the companies reported yesterday post-market hours. But Varun, coming to you first, then a whole host of life insurance companies reported their numbers. How were they?
HDFC Life results came out and missed the estimates. The APE was slightly below the estimate but grew by 12.5% on YY basis, whereas VNB and VNB margin below the estimates. VNB margin was range bound at 25.1% on YY basis, and the management expecting the growth in H2 to outpace the H1. However, for full FY26, the growth is likely to come below the FY25 levels. The next is from the ICICI Lombard Insurance. The results were mixed. The gross return premium were below the estimates but grew by 2% on YY basis, but whereas net earned premium were above estimates and as well as the PAT. The PAT were above the estimates due to the strong investment income, but the combined ratio lagged behind the estimates. The management said for the FY26, the growth to be led by the commercial and retail health segments. The next is from the Bajaj Finserv. The IRDA has accorded its approval to both the aforesaid insurance subsidiary for transfer of equity shares held by Allianz SE, representing 26% of their paid-up capital, to the company Bajaj Holding and Investments and the Jamna Lal Sons Private Limited. And the next is from the news for the general stocks, insurance stocks. The IRDA approves the norms for the rural social sector and the motor third-party obligation for FY26 and FY27.
All right, so those are some of the insurance counters we'll be keeping an eye out for today. But Sharad, now coming to you, which are the stocks on your list?
Supportive news coming in for Brigade Enterprises as its flexible workspace arm Buzzworks has announced its latest center at Business Park at High-Tech City, Hyderabad, spanning over 50,000 square feet. Up next is Adani Wilmar's agribusiness Q1 update, a strong update coming in with the highest ever Q1 revenue coming in at roughly 17,059 crore rupees, which is a jump of almost 21%. The growth has been mainly driven by the edible oil business, which grew at 26% on a year-on-year basis, and the management also stated that the raw material prices have corrected by over 10% in the last 3 odd months. Also, auto stocks would be in focus, especially in the EV segment such as TVS Motor, Bajaj Auto, as government sources to ET now suggest that they are signing rare earths related partnerships, and now that has become India's active FTA strategy. Now India is in talks with signing agreements with Chile, Peru and also with Japan, Korea for rare earth processing technologies.
Adani Wilmar, Brigade Enterprises in focus. Sharad, thanks so much for that. But Varun, coming to you, Varun Dubey, which are the stocks on your radar this morning?
So let me start with Zydus Life, because the company has received a final US FDA approval for one of the anti-inflammatory drug, that is Celecoxib, and the annual sales in the United States for this drug in the previous year was around $122.6 million. So keep an eye on Zydus Life. Keep an eye on Dixon Tech also, because the company has entered into a binding term sheet agreement with Kunshan Q Tech Micro Electronics and its shareholder for the acquisition of around 51% stake in Q Tech India, and also the company has signed a binding term sheet with Chongqing Yu High Precision Manufacturing Company, that's a Chinese company, to form a joint venture of around 71 to 21% ownership ratio, and the JV will focus on the manufacturing of precision components of laptop, mobile phones and automotives and also other products. Also keep an eye on Biocon, because Biocon Biologics, they have expanded the diabetes portfolio with US FDA approval for Kirsty, which is the first and only interchangeable rapid action insulin aspart in the United States, and for Novolog, the overall sales in the United States was around $1.2 billion for calendar year 2025. So keep an eye on Biocon as well, because this is a big update coming for Biocon.
All right, so those are all the stocks we will be eyeing out for in today's trading session. Thank you so much, Varun Arora, Sharad and Varun Dubey, for joining us and taking us through that entire list. All right, then moving on, Snehi is now joining us with all the cues that we need to watch out for today.
Well, there's lots of cues to watch out for. not much happening back home on the macroeconomic front, but globally you have PPI numbers expected from the US along with their industrial production, and the Fed's beige book will also be released. Along with that, watch out for the inflation print from UK in the form of CPI numbers. In terms of global earnings, you'll have aluminium major Alcoa, along with that some big banks coming in from Wall Street like Goldman Sachs, Bank of America, Morgan Stanley, that will be reporting their earnings. Back home, you'll have Nifty 50 major Tech Mahindra that will be coming out with its numbers, so those IT earnings continue. And other than that, you have Angel One as well as DB Corp that will be coming out with their Q1 FY26 earnings. In terms of corporate action and board meetings, lots is happening tomorrow. First up, watch out for SBI. The private bank is, the public sector bank is going to be mulling fundraising, so watch out for that. Glenmark Pharma Investor Day will be in focus, so watch out for that stock as well. Ashok Leyland will be trading ex-bonus in the ratio 1:1, so that is going to be a stock to watch out for as well. Piramal Pharma and TCS will be trading ex-dividend, and it's going to be the last day to buy shares of Coromandel International to be eligible for interim and special dividend if you want to be eligible for their record date. In terms of other events, some Fed commentary expected from New York Fed President John Williams and Richmond Fed President Thomas Barkin. Both of them are set to speak. ECB Governing Council member Francois Villarao-de-Galou is also going to be speaking. And from reports, we understand that NVIDIA CEO Jensen Huang is also going to be holding a public briefing in Beijing. So all of this commentary is going to be very important to track. So watch out for all of these cues.
So a whole host of cues and events to keep an eye out on today's trading session. Snehi, thanks so much for joining us with all those details. But Vikas Khemani, founder of Carnelian Asset Management, remains bullish on financials as he sees benefits to trickle in for the sector on the back of a rate cut cycle. He also says that first quarter will be better than the last quarter. Listen into his rationale.
BFSI, we've been very, very positive for last 6-8 months, and we have significant overweight, and we have benefited from that, and that's likely to continue for some time. But any other interest rate sensitive sector, I would do well. Q1 would be better than Q4, I think, but again, Q1 is slightly seasonally weak quarter than Q4, so you can't look at Q on Q. But there are some sectors which will do well. Might be some sector which might not do well because this was also a quarter of very uncertain news flow on tariff, commodities, freight movements and all those things. So you might see some sectors getting negatively impacted because of those uncertain times. But I do feel that Q2 would be the real, direction setting for the year. I do start seeing earning upgrades across the board.
Was Vikas Khemani on why he continues to be bullish on the financial space. But on that note, we'll take a very short break on this edition of Market Cafe. We'll be right back with more on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not.
Market Kospi, that is down 0.6%. It has shed nearly 18 points in today's trading session. Hang Seng Index, that one is also up over 1%. So that's a contrary view coming in as compared to Nikkei and Kospi. So Hang Seng Index, that one is up 100 points, over 250 points higher for Hang Seng Index. Nikkei, as I mentioned, is absolutely flat as we speak. Shanghai Composite Index, that one is also flat, not doing anything at the moment. And we have ASX 200, which is down 0.7% as we speak. Shanghai up marginally though, and we have Hang Seng, which is up 1% as we speak, 240 points higher for the Hang Seng Index. Nifty implied open is suggesting a slightly negative start for the Indian market. It is now down 80 points as we speak. It is trading near that 25,186 mark. So Asian markets have opened mixed, but we have Nifty implied open, which is suggesting a tepid start for the Indian markets.
All right, so that's how the Asian market setup is looking right now, and a start in the red is what we are expecting at this point in time for the street. But moving on to some key macro data. Now, India's trade deficit narrowed to $18.7 billion in June. That's lower than May's $21.8 billion in May. Now, exports, they have been steady at $35 billion versus $35 billion on a year-on-year basis. Now, that's as per the government data that we received. Meanwhile, imports, they have dropped 3.7% on a year-on-year basis to $53 billion. That's also as per the government data. Now, this data comes at a time as the centre continues to push structural reforms and global trade partnerships. In fact, let's take a look at some other key highlights coming out of this data. Now, services trade, that continued to be a strong support, showing a $15.6 billion surplus, with services exports at $32 billion. That, despite the ongoing policy-related disruptions globally, there's been a surge and that has been noted in exports to the US, and that's been recorded up from $20.8 billion in Q1 of last year versus $25.5 billion in Q1 of this year. Data also shows that despite global challenges, India has put up a good show on exports front. Now, in Q1 of this year, which is the April to June quarter, exports exceeded $210 billion versus $198 billion clocked in the same period last year, and that's been a rise of close to 5% growth. Now, this figure of $210 billion, which has been achieved in Q1, is the highest ever since 2016 to 2017 in the same quarter. Now, another highlight is the 6% growth which has been clocked in non-petroleum exports, even as trade under FTAs is rising. Engineering goods, petroleum products, electronic goods, drugs and pharma, organic and inorganic chemicals, they're the top 3 exported commodities, while US, UAE, Netherlands, China, they're the top export destinations from India. Meanwhile, China continues to be a top import destination for India. In fact, government sources tell ET now that the Commerce Ministry has started monitoring unusual surges in imports of commodities and will take action if found that the increase in inbound shipment was on account of any malpractice.
All right, shifting focus then, IRDA has formed special panels with whole-time members to review violations by insurers and intermediaries. At its 132nd board meet, IRDA also approved norms for rural, social sector and motor third-party obligations for FY 26 and 27. We have Anurag Shah, who is now joining us with more details on this.
So, ET Now news break got confirmed about our license to Kiwi General Insurance. So, as per the IRDA press release in a board meeting, IRDA has approved initial stage license, R1 license to the Kiwi General Insurance, which is promoted by Westbridge Capital and Nilesh Garg. So company can start setting up their offices before their final approval under the R2 license. Other than that, the big announcement is related to the IRDA's social, rural and third party obligation. So 25,000 gram panchayat need to be covered by the insurance industry, but number of lives in these gram panchayat has been increased from 10%. So for FY26 and FY27, insurance industry need to cover more than 10% of their overall premium in motor insurance, health insurance, property insurance from these 25,000 gram panchayat. This is mainly to focus to increase penetration in rural areas, in rural villages. Other than that, other announcement is related to the risk-based capital framework. So now second quantitative impact study has been launched by IRDA for the risk-based capital, and insurers have to comply in next 2-3 months. There are the panel has been formed to review violations by insurers and insurance intermediaries. The panel will be of whole-time member of IRDA. Other than that, a separate panel to handle the share transfer and specific application related to the approvals. So these are the main highlights of 132nd board meeting of IRDA, which happened on 14th of July.
All right, thank you, Anurag, for taking us through the key takeaways of the IRDAI board meet that happened yesterday. But shifting focus to the aviation space then. Now, Air India, that has announced partial restoration of schedules that were reduced following the accident of AI 171 on June 12th. Now, from August 1st to September 30th, Air India will operate 3 weekly flights between Ahmedabad and London, is the word coming from the airline. Now, with partial restoration, Air India will operate more than 525 international flights per week. In fact, my colleague Samir is joining us with all the details.
So that's a big and important development as far as Air India is concerned, that now they are restoring the flights which were earlier curtailed or they were reduced, citing as a safety pause. Now, we remember that on 12th of June, after the tragic incident, the aircraft crash AI-171 flight, DGCA, Indian Aviation Regulator, they ordered to carry out the safety inspection of the entire Boeing 787 fleet, and because of which the airline, Air India, they opted to curtail or to restrict flights to a couple of the international sector. But now Air India has announced to restore these flights gradually. So starting August 1st, these flights will be restored partially. Air India has announced that full restoration will take place from October 1st. Now, very important that Ahmedabad to Gatwick flight, which were earlier operated 5 times a week, now from August 1st till 30th September, they will be operating Ahmedabad to London, Heathrow Airport, not to Gatwick. And this will be 3 times a week flight. Similarly, Air India has also announced fully restoration or even the increase in frequency of the flights to a couple of important sectors. For example, to Europe, they have announced that they are fully restoring, and even for Delhi to Zurich, they are increasing the flight frequency. Even for Far East or North America, these sort of international destinations, Air India has announced that they are going to restore the flights. A full restoration, it will take place from October 1st. But with this partial restoration, Air India has announced that they are going to operate 565 international flights to 63 long-haul, ultra-long-haul, or even to shorter international destination, and this will help the airline to expand its frequency as well. Air India has also communicated to the passengers, those who were earlier affected, those who are having confirmed ticket, that if they are looking to get a refund or they want to reschedule their flights, then they can connect to the airline, and that sort of assistance will be provided.
But Samir, stay on with us. The Union Health Ministry has also issued an advisory to promote healthier choices at workplaces. It suggests putting up awareness boards in areas like lobbies, canteens and meeting rooms to highlight the risks of hidden fats and excess sugar in everyday foods. Samir, tell us more about this.
So the Union Health Ministry has clarified and has come up with a full statement that mentions that no such directives or any order has been issued where the vendors, they have to put any sort of warning labels on the food items, specifically for samosas or even for jalebis or laddus. So the ministry has termed these sort of news as completely misleading, baseless and fake news. So it has got no substance. That what the larger message that ministry has given in, that these sort of directives to the vendors, these news are totally wrong and no such directives has been issued. But yes, ministry has also given a message that largely they want to give an advisory kind of advice to the masses that they should adopt more healthy food items, especially at the workplace. And this will help to address the serious concern of obesity. We have seen that Prime Minister Narendra Modi has also raised this concern in his famous Man Ki Baat that people they should adopt to more healthy food items. They should adopt to more physical activity, and they should fight the obesity. That is a serious concern. But yes, ministry has clarified that there is no directive or no order from the ministry to the street vendors to put any sort of warning labels on samosa, laddu or jalebi. And this is definitely a big relief for the street vendors who were actually a bit confused whether they have to adopt it or not. And there was a mixed sort of opinion, especially on the social media platform, where largely it draws kind of a criticism. But now ministry has clarified that no such order has been issued. But yes, there is an advisory, especially at the workplaces, to adopt to practice the healthy food items like the fruits and other vegetables. But the entire exercise is advisory in nature, and no such mandatory or the directives have been issued by the ministry.
All right, so no warning, no directive to put out warning labels. but an advisory to avoid junk food there. But moving on, India and European Union will hold the next round of negotiations on the proposed free trade agreement in September, as both sides have exchanged offers related to the services sectors last week. Sumita is now joining us with more details.
That's right. India and the European Union will hold the next round of negotiations on the proposed FTA in the first week of September, as both sides have exchanged offers related to services sectors last week. In fact, Department of Commerce has suggested that the 12th round of talks, that is the last round of talks, concluded last week in Brussels, wherein offers on services and non-services were shared and discussed. Key interest in market access related to goods as well was discussed. Remember, in May, when the 11th round of talks happened between India and the European Union, ET now reported that digital trade complexities were acknowledged by the European Union. In fact, the team from EU also recognized India's concern around carbon tax levy on imports, and sources told us that a collaborative clause could be looked at for Indian industry. In fact, EU respects sensitivities related to India's agri sector. In fact, the trade deal talks between India and the European Union resumed in June 2022. In fact, in February this year, the Prime Minister Narendra Modi and European Commission President, they both agreed to seal a much-awaited free trade deal by the end of this year. Now, besides demanding significant duty cuts in automobiles and medical devices, the EU also wants reduction in products like tax reduction in products like wine, spirits, meat, poultry, and a strong IPR regime. And both sides are also looking at supply chain integration opportunities as well.
Sumita, thanks so much for joining us with all those details. But shifting focus to some national stories then, and a technical team from Italian fashion house Prada arrived in Kolhapur after online backlash over cultural appropriation for featuring Kolhapuri sandals at its Milan show. Executives from the Italian luxury label have reached Kolhapur to engage with local artisans. Big relief coming in for movie buffs in Karnataka. The state government has now issued a draft notification capping movie ticket prices at 200 across all multiplexes, giving theatres a 15-day notice to comply.
Tragedy struck in Pithoragarh as vehicle carrying 13 people crashed near the Suni Bridge in Muvani town, leaving 8 dead and 3 seriously injured. Meanwhile, police have reached the spot and rescue operations are underway. Cricket is set to make its grand return to the Olympic stage after more than a century. The sport will feature in the 2028 Los Angeles Games in the fast-paced T20 format, with matches starting July 12th. 6 top teams with 15 players each will compete.
On that note, we need to slip into a very short break, but more news and updates will continue on the other side. Even as vehicle costs dropped in the month gone by. A sharp drop in car prices helped offset rising costs in tariff-hit goods. On an annualized basis, core CPI was up 2.9%, in line with expectations. Trump also used the data to press the Fed for rate cuts. Despite recent cooling trends, inflation remains above the Fed's 2% target, complicating its policy path. In fact, we also caught up with Santosh Rao, Manhattan Venture Partners, to decode the same. Let's go across and listen into his views.
Inflation is creeping in. Prices of goods that were imported, they went up. So like consumer products, imports related to consumer products definitely went up. So we saw signs of inflation peeking into the market. So we'll see more and more, because companies had a lot of inventory stacked up, so they not pass down everything. They still have the old prices in the inventory, but as we go along, you'll see them pass down more. So you will see that, yes, it was contained to some extent. It was expected. The market expected some inflation effect. We saw some inflation effect, but not that much as yet. So net, the market is absorbing this, but there was enough for people who could say that inflation is going to affect prices. I think they saw enough of it there.
All right, so that's the expert view coming in on the US inflation reading. But shifting focus to the oil market now. Now, OPEC has said that the global economy may perform better than expected in the second half of the year. Despite trade conflicts and refineries, crude intake would remain elevated to meet the uptick in summer travel. Now, that would help support the demand outlook. Now, in a monthly report, the Organization of the Petroleum Exporting Countries left its forecast for global oil demand growth unchanged in 2025 and 2026 after reductions in April, saying the economic outlook was robust.
Let's also put the spotlight on Q2 earnings of some US banking giants then. The world's largest bank, JP Morgan Chase & Company, recorded revenue for the quarter gone by at $44.9 billion, which though 11% lower than what the street was working with and on a year-on-year basis, exceeded street estimates. Profit fell nearly 17% to come in at about $15 billion, better than estimates. Jamie Dimon said that the US economy remained resilient in the quarter, but also stated that significant risks still persist. If you look at Wells Fargo, well, that's another bank which posted better than expected revenue and profit, but the lender trimmed its interest income guidance for the year, and they now expect it to be roughly in line with 2024 level of about $48 billion. When it comes to commentary, CEO Charlie Scharf said that activity levels are steady even amid risks. BlackRock earnings were also above estimates. Earnings per share for the company stood out. It was higher than the forecast by about 13% to come in at $12 per share. Revenue was robust. It was up 13% on an annualized basis. And now the final banking major which reported its earnings today. Citi's second quarter results were also ahead of estimates. Net income climbed nearly 25% on a year-on-year basis, and revenue was also up 8% in the same period.
All right, so shifting focus to tariffs now. Now, more trade deals in the offing, it seems. Now, Trump claims that he has struck a deal with Indonesia, announcing a 19% tariff down from the 32% he had threatened last week. Now, Trump says Jakarta will also buy $15 billion in U.S. energy, $4.5 billion in farm products, and 50 Boeing jets as well. But so far, Indonesia hasn't confirmed any of these details. In fact, Commerce Secretary Howard Lutnick suggests that Indonesia will drop tariffs on U.S. goods. Now, the president, meanwhile, said that more tariff letters are on the way for smaller countries, signaling rates a little over 10%. He added that they are happy with simple deals already covering over 20 nations. In fact, let's go across and listen into what Trump had to say about the update on deals with Indonesia and India.
Indonesia was great. He's a great president. And we made a terrific deal where they opened up the entire country to trade with the United States. We weren't allowed to go in and trade. I think something similar will happen with I would say, India. And we have a couple of others.
Okay, so that's the word coming in from US President Donald Trump, but HDFC Life, that one reported its numbers, and in fact it's all set to report its numbers today. How were they? Varun is now joining us to give us all the details. Varun, over to you.
Yes, HDFC Life reported numbers and they were below the estimates. The AP grew by 12.5% on YY basis. This is driven by the growth in individual and the group APE. The VNB grew by 12.7% on YY basis, whereas the VNB margin stood at 25% flat on the YY basis due to the shift in product mix on the lower yields offering. On the VNB margin, the company expects to be the range bound due to the slower growth and the reinvestments into the distribution expansion and the fixed cost absorption. The PAT grew by 14% and that increased in the back book profits. On the guidance front, the management expects the H2 to outpace the H1, and however, for the full year FY26, the growth is likely to come below the FY25 levels. And the management also discussed over the non-par product mix, which is likely to rise in the mid-20% range, while the share of par product is expected to decline around 25% during the year.
All right, so that's how the HDFC Life fine print is looking like for Q1. But Tech Mahindra, that is all set to announce its results today. Let's go across to Pulkit to get us some more details on what the street is penciling in.
After TCS and HCL Tech, now it's time for Tech Mahindra. So expectations are very different from what TCS and HCL Tech had. So if we talk about revenue in USD terms, we are expecting to be up around 0.6%. If we talk about in INR terms, we are expecting to be flat. For EBIT, we are expecting around 3% up, and for EBIT margin, expectations are about 30 basis point in an upside move. For profit after tax, we are expecting around 3% upside, and all are on quarter-on-quarter basis. If we talk about the Q4 particular business-wise expectations for BFSI, cloud and digital offerings, they are expected to be in a good manner. But when it comes to the telecom part, which is around 35% to 40% for Tech Mahindra revenue, the revenue could be, or the business could be, in a sluggish manner. For pipeline, yes, it is expected to be remain healthy, but when it comes to the revenue conversion for these pipeline, the expectations are not very good for this particular thing. If we talk about margin expectations, for particularly with the help of Project Fortius that the company started last year, we are expecting to increase our margin by some basis points with the help of this. If we talk about the management outlook and what we should focus in the management commentary, so the main commentary would be on the 5G, Gen AI and telecom business recovery, how they are shaping up and what is the demand outlook for these particular things, discretionary spend by clients, headcount and attrition trend inside the company, and the most important thing, that is tariff and geopolitical tensions, how due to this tariff and geopolitical tensions business is shaping up, and what the company is expecting for further FY26.
So all eyes will be on Tech Mahindra numbers, which will be released later today. But that's all the time we have in this edition of the show. But don't go anywhere. The market will take all the action forward. Stay tuned.